Okay, here we are, Saturday evening. I got some new stuff to show you, but we'll go through that later. Let's jump into June. So, what transpired? Okay, we've been going down, and again, I'm not a forecaster of exactly when, but I've been saying sometimes mid-June. It could be around the FOMC this week on Wednesday, could be Thursday or Friday. So, I'm expecting an uplift, and I actually was expecting them to decline going into 14. I bought some initial shares of GDXY, and I think it's some you can buy at any time. These are great, great prices. This thing is going higher. As to the timing, I'm never going to be able to, I would just simply go out and buy massive calls on GDX if I knew the exact timing. But I do have a model. I do have some, propensity to believe certain timings. And I think after we run up really high for 2 or 3 months, we're going to turn around and retrace 50% of that and then go off into 2025 and have up. But there's going to be a lot more upside. So I did promise a video. This isn't it, where I just say, why GDX, why now? Right? The truth is, it's why precious metals miners in general. GDX just happens to be one of the larger, I'd call it mid cap and large cap mining. There's exploration, there's small cap where they're producing some and exploring. I mean, not that even big miners don't explore, but usually they just acquire assets in the ground, ounces. But I'll do a lot more on that. So let me jump into this. So I didn't do it for 2 days. So we had some trades on 6/6. All right. We sold some more, and that was a big up day, right? That was a day where we went up GDX went up 3.51 and we went up 2.49. Typically, we never on a bigger up day. That's a big up day for GDX, 3.5%. And somebody, I think it was Virginia, one of my subscribers commented, hey, nice big day, right? Big move. But then we turned around, look at this, 6.86. We were only down 5.73. I guess this is as good a time as any to go back and pull the chart up here that I was talking about. So I want to build more tools here for you guys, because this isn't like going into Amazon where everybody knows, they're a retail shipping products company. But the truth is, most of Amazon's revenue is now coming from their cloud services. And then what's really going to excite their earnings in the next quarter or two is their competition with Google in the ad space, right? So Amazon is a three-headed monster in that sense. They're almost, what's the word I'm looking for? They almost own, the retail online shopping. It's so easy, I didn't even, I'm talking retail, but online shopping. They practically, it's probably a monopoly. The Bezos rules and a lot of things he does, but they're a brilliant company around that. And yet, I'm not as bullish because I see this recessionary kind of thing coming up for a while. It's not a massive depression. It's recession and high inflation. But I think that's a good stock. I mean, I don't own it, but it's way better than anything, getting 5 or 10% on treasuries or anything. So, I mean, you don't get 10% on treasuries, but just throwing that out. So what I did here was I simply went out to Yahoo Finance and I pulled in their data, right? And I pulled in GDXY. And so I took a short sample. Obviously, you can go back multiple years here. And I put these side by side. I intend to do a lot more things, some means, some averages. But what I wanted to show here is just quickly, and people say this all the time about Yieldmax funds, right? So we're talking GDXY, not a very popular. I mean, it's more popular than some, ARC, is not particularly, but they have more and they've been around longer, like Tesla. So let's take a look here. People say, before I show you, that Well, you should buy the, you should just go buy the underlying, because if GDX is going up 8% and you got an income, you're not going to go up 8%. Well, generally that's true. But we will, and they say, and you got all the downside, so why would I want to be in an investment like that? It's got all the downside, it's limited on the upside, you get capped on your covered call, which are really naked call strategy, on top of your synthetics. Because the synthetics are a pure bull, right? You sell a put, you buy a call. There's nothing capped about that. It's just by selling these calls, it's additional income. And that's a strategy of saying, well, we're covering our long exposure, right? But again, for me personally, I don't like to be called a covered call, because you don't own any stock. What are you covering? Oh, you're covering the synthetic, or you're doing insurance, so you get weekly income in case the synthetic goes down. Okay, enough of that. So let's look at these. Let's look at facts. So people are always taking Tesla, the oldest fund that was super popular on Tesla, and then, oh, I lost 40% of my NAV. Yeah, you sure did. And I always say this, but why would you buy a stock that's up 40 times in 2 years? Don't you think that it needs some rest? Don't you think it's going to go down some? Do I believe Tesla has a bright future? Yeah. But I can't tell you when it's going to go again. It's probably going to go down to 100 before it goes to 250. And I don't even know what it's at, 170, 180. I don't really track it. I don't own it. I do kind of like the crash Tesla, acquisition. Buy them both and get some income. And unless one moves 30 or 40%, you're going to win in both. As long as it stays within a 5 or 6 or 7% trading range, you're going to pick up nice income, and you're not going to have any real NAV reduction to speak of on either one. You're going to offset in one if you have slight NAV in the other, right? And they're also coming out with dips, right? DIPS, I think, or was it DPS something? I think it's DIPS, which is a negative on NVIDIA. I know, I just said negative NVIDIA, all the subscribers will go away. I didn't say it right now, but it has run a long way, right? It's splitting. I did a video on that. I think they got fabulous tech. All right, let me get into this. So 4.01. So what I did was I tried to market if we went down less than they did on a down day, or we went up more than they went on an up day, right? So you can tell up or down by minus or plus, right? The percentage of change. So they went down 4%. We went down 3.79. That's a win in my mind, because we didn't go down as much as they did. Here's something. They went down 1.97 and we went down more. So I can't count that. They went up 1.47. We beat them in the percent that we went up. Another win, right? And then this one is the obvious. They went up 2.2. This is more normal over a long term, that we track 60, 70, 80, 90% of the up move. It just varies. It depends on how aggressive the up move is and how capped we are. But look at, and there's some others in here where, here's one that maybe shouldn't be green. They went up 105 and we went up 96. So I really should take that one off. But when they're downs and we go less, that's a win. Oh, here's another one. Yeah, there's a couple mistakes in here, guys. So maybe I overdid this, because you got to look real closely at the plus sign. I'll take this one off. But just having this, really, I mean, that was like 10 out of 12. Wow. But, it's easy to go quickly and make a mistake. And then I put it in a table so I can sort these. And when I have more data, it'll be kind of fun. There's a lot of things you can do. Here's a down day. We clearly won that down day. We clearly won this down day. We went up less than they did. Okay, so they went down less. So these other two don't belong over here either. Sorry about that, guys. But it's what happens when you spend some time to help people, right? So we got 1, 2, 3, 4, 5, 6, and 6. So there's 6 days we win, 6 days they win. So somebody that just says you're never going to have the same upside as them and you're always going to have 100% of the downside, it just proved that wrong. It's a 50-50 strategy. I either go up more than them or I go down less than them. Right? That, to me, that's good, and I'm going to collect income on this. So that's where I was going. This really needs to be a 6 and 6 situation, but it was fun to do, and there's lots more. All right, let me get back into the core. So we got June. We put on this 130 contracts, and then obviously we rolled on Friday, right? How'd we do on all the 6-7 trades? We'll take a look at it. We got 38 cents, we got 30 cents, we got 26 cents, we got 32. This was a big guy, right? But look at these, 3 cents, 2 cents, 2 cents, 2 cents. I don't really know why. This was a 36.5. It was the highest one. We were down at 34. I mean, why didn't they wait and buy it back at 2 cents or a penny and a half? I mean, I know it's a little more complicated. Jay touched on some of that in the flex environment. They sort of have to say, oh, okay, there's not an exact bid and ask, and you say, okay, we want to buy it back, you know, at this. Okay, we'll let you do it at 3 cents. So, but you're talking pennies here, right? It's $405 on 5,130. But it annoys me, but given the European option of no assignment, so that's what happened, right? We collected 99% of the money. Beautiful. We do that all the time, and we're going to be a fat cat. Okay, so these are the 2 previous, and then we put the big one on, right? Well, how are we doing already with those? Because it was a big down day. This one, we are laddered a little bit. Laddered in the sense that we're spread out over multiple strike prices, but we still have one big one. But it happens when new money flows in, they'll add some more. You know, on Monday or Tuesday, if people buy into the fund, sometimes even Wednesday, they'll write more 614s, right? So we got 3 different strike prices: 35, 35.50, and 36.50. Look where we are, right? 33.54. So don't worry in the least about buying this fund. I mean, it could go to 1780 or something, but we're skating to where it's going. We're not worried about exactly the price right now. Now, if you want to go buy Misty and you want to go buy NVIDIA, you know, go buy them. I'm not going to tell you not to buy them or Coney, but I'm just saying I have a lot of confidence in where GDX is going, and I'm going to, again, make a video, even though I showed a lot of charts and other stuff, and I feel really, really comfortable with that. So I don't mind collecting a little income on this, right? But don't, you know, have somebody go, oh, you said it was going to go up, and I bought it at 19, and it's 18, what's going on? Well, give it a little time, right? Rome wasn't built in a day, didn't die in a day either. Okay, so I didn't update those. They don't really matter, right? What matters is the share count. 325. We stayed there, but when that money flowed in on 6.5, we started putting a few trades in, put a few more in, and then rolled, right? So here's our synthetic. We've got a liability. I mean, we really do. We have 737,000 because we chose this high, right? But it's out at 719. I expect that to be blown out in well into the 40s here, if not 50. So maybe 60. You know, we just have to see as it goes on the charts and look at the volume. I want to see volume coming in. All right, let's look on our holding because that tells us everything. They've got 737 that we're behind. I feel like I'm describing a Boeing jet when I say 737. I guess I flew too many. I think 2 million miles, actually, what they call butt-in-seat miles. So I was an active cat the last 10 years flying international and traveling so much that I love being at home and not doing that, not commuting anymore. Okay, so we have put on 66,000 in collected income, right? We sold all these different strikes over the last couple of days, and we've already could buy them back for 34. So I think it's 48%. I had the percentage, something happened to it. So I'll double check that. It might even just be, it's showing white, so that's probably not the problem. But I have it over on the other tab. So let me finish this. Again, so this now, I need to update this one. So we're moving up higher on the losing side, especially on Friday. Went from 477 to 700. But again, not worried on a paper situation there. I want to look at the piggy banks and see how much cash we put in the door. This is saying we're trading at 1910. Let me make sure on the holdings that I updated this value, 59. Actually, it's worse than that. 59338. What's that do for me down here? 1891. It did not really change that. Whoops, that's because I didn't push it down. I'm using. Oh, that's weird. Can't really figure that one out. That's a very... Oh, that's not the right. Sorry about that, guys. You know, there's just... let me go get June. Yeah. I knew we were lower after I really looked at it, right? We're 1826. Okay. Well, duh. We're even. That doesn't happen all the time either, though, guys. You've seen that, right? So a couple little updates, and we're right at fair value. No shares mentioned. We've got this. It's a paper loss, not a big deal. We captured all of our weekly. We're at, let me show you on the weekly, we're at 47.8%, right? So we've captured 31,000. When you take it away, it's like 34,000 that we need to buy it out right now. Now, there's a full week. And unfortunately, the biggest one is written right at 35, right? Only 4% out. But I was expecting this week, the latter part of the week, so that'll be really interesting, right? I don't see the Fed cutting, but there can always be Fed speak after the meeting. There can be their guidance going forward. Hey, we're going to cut in September. It really looks like it. We're seeing data. And that could help fuel, because sometimes the miners move with the markets, right? Sometimes they move, with the market. Sometimes they move against. There's a period of time that gold goes up, the dollar goes up in the stock market, which are all at odds with one another. Normally, a strong dollar is bad for the stock market, right? A strong dollar is bad for gold. But I've seen Bitcoin, who I'm also very bullish, run with the tech FOMO. The higher NVIDIA goes, the higher BTC goes, and with all the high-flying NASDAQ stocks. So there's periods of connect and then periods of unconnect. So you can never just 100%, expect that. But this is positive. So let's jump to the final thing. And volatility is moving up, right? You saw that Thursday move up, and Virginia said, hey, we had a nice day. And then it turn around and a much bigger down day on some volume, which I expect that will probably bottom this week and start up on Thursday or Friday. And if not, then the next week or so, because I really see a pretty strong July in precious metals. I mean, I'd be shocked if we don't move up substantially, both the metals and the miners. Okay. And I'll get more into why and how and all the other dynamics in this next video. I'd probably be a two-parter or something. The other thing that I want to do for you guys, because I keep getting asked, especially with new subscribers when I mention how much money you can make a month, I'm going to break a series down into 3 or 4 parts, understanding Yieldmax funds, and just go in from European options, American to flex to synthetics, how they interwork, to which funds, do they really go down the same? Are they capped? Just all of the things that I've learned on top of all my option knowledge and trading. And I've always said, and anybody that listened to Jay's recent interview done by another YouTuber, Jay alluded to the fact, and don't forget this, guys, I said it without knowing the intimacy of which one. I said, well, this stuff was only available to institutional, to multimillionaires that want to invest. Well, Jay talked about, we've been doing this for multiple years. Once he left Ameritrade in Nebraska and, running trading there, he probably formed Zega with another partner and some of those things. And then they did private equity. They still do private equity. What's private equity? It's rich people. Say, I'm wealthy. Maybe I inherited it. Maybe I didn't from my grandfather, from my family. And I got, $4 million in Apple stock. And I don't really want to watch the markets. I don't want to understand. Somebody just said, oh yeah, you're going to get a dividend now and collect that. And so they talked to a financial advisor. And so Jay and them basically are doing what they're doing for us at a 1% management cost. I'm sure in private equity, they're charging more money, right? Because that person can call, they have to customize strike prices for them because maybe they joined in the middle of the month and they're rolling it. But they're using these same sophisticated option strategies for that individual and say, well, you don't have any downside protection. You just own, $3 million worth of Apple. Yeah, I don't understand the stock market. I don't want to start stock picking. What do you think I ought to do? Well, let us give you some income on top of it and keep owning Apple. And when you tell somebody you can get them 25 or 30% on Apple and keep the stock, that's pretty damn good. And then maybe you say to them, well, what if it goes down 20%? And they say, well, you want us to buy you some puts? And we'll do that. And we'll take that out of the income distribution. So, private equity and capital like that, if you've got money to throw at them and let them manage that, I don't know what the fees are anymore. I used to know. So, but my point is, I say this all the time, and I don't know if it resonates with people, that you're getting institutional level products at retail cost. It just didn't exist this way. So this new stuff is pretty pioneering, right? And when I match it up with something that I ran for the decade of 2000 to 2011 and retired on and made 6 or 7x my money, and if I was better and had the skills I have now, it probably would have been 11 or 12x. So all I'm saying to you is these cycles run, and when they run, you want to be in on a bull. You do not want to be on a stock that's bearish, right? Okay, so let's do payout and I'll let you go. So here's our synthetic. Again, I broke it because we had, 9 trading days in May? I'm picking that up from these charts, right? So we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 trading days. So I'm tracking both of these. I'm going to add them together. And you can't just simply add them. You've got to weighted average them, right? Because look at this. I've got a share count here of 275, which means these kind of payouts, we have $1.07. But if you take that same amount of money and put it over 325, it's not $1.07. So I'll take care of that for you guys. But look at it. It's all positive. Yeah, we got a liability out there at 7.9, but that isn't going to affect a 7.5 declaration. I think, by the way, it's 7.5. I'll look. I'm always saying that. But it's 7.3 or 7.5, the next declaration. It may be 7.3, and we may pay on 7.5. That would be pretty fabulous. I don't know if 7.5 is a holiday. Obviously, 7.4 is, July 4th. So anyway, and that could push it out, to the 8th or whatever that next Monday. So this is pretty good. We're just cruising along, collecting our income. So this bear to slightly down neutral is allowing us to collect money. We got no big synthetic wins or losses, but we also are collecting money all the time. Love it. At this pace, this is probably a 35%, 45% yielder. But when this stuff starts moving, we're going to be up there 70, 80, whatever, you know, because that's the nature of the precious metals when they play catch up. They play catch up aggressively, let alone the metals. Wait till silver runs. Oh, silver's going to really run. Okay. So we're setting good. I wanted everybody to get this out. I apologize for not putting one out sooner. Again, Bruce out, not financial advice. I'm not a financial advisor. Fun, education, and entertainment. Bye.